Hey there, Russell traders. David here of TradingFibs.com to bring you the Russell recap for June 6, 2013, D-Day Remembrance Day. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and never move your stop when placing a trade. Let's get right into the four major indices. As we could see, the major part of the morning session was chopping it up inside the open range. Our NQ falling on the OR low. Eventually, all four major indices coming down, giving an opportunity. And then by mid-morning on West Coast, post-lunchtime on the East Coast, opportunity through the range and then break above within the last hour to the last nearly 5 minutes on the Russell. The market internals for the majority of the day were mixed in the beginning of the day. Our AD line gave an opportunity with all market internals in the red at 2.5 hours past the open. All market internals eventually turned around and brought buying opportunity up and through the range and to close above. Getting right into the 6 charts. Top 3 using my 25-minute open ranges and the bottom 3 using daily pivot and support lines. The daily support resistance, chopping it up in between the daily gap and the pivot, 968.3 to 971.7, and then eventually breaking down to daily S1, punching through back up to daily R1. The 1 hour open range, a high of 976.4 to a bottom of 966.7. Breaking through to the downside, hitting 2 targets down to a 1 hour open range S2. Again, coming back through the range and within the last 5 minutes, coming close to closing it out at the 1 hour R1. And on Camarilla pivots, momentum above the H4 at the end of the day. L3 giving support, multiple lines of support on the entry on the downside, and punching through the H4 at the end of the day. 2 opportunities today on the 25-minute open range entries for momentum. Out of 2 possible trades, I took 1. The first trade here at post 2.5 hours of the market open, and the last trade within the last 5 minutes. The first opportunity that might have arose was a momentum in the market on market internals that was giving some action on our Heiken Ashi from the market open. Here we can see some nice price action, big long tails, big solid bodies with long tails up. A little bit of a turnaround, 25-minute open range set, and then EMA crossover, and then another solid round of buying using a Fibonacci extension, a target hit, but a Heiken Ashi bar that never really cleared the top of the 25-minute open range, which did not give me an opportunity to enter, and I did not take that trade. Next best scenario was again the first best scenario. That was the first possible opportunity. Looking at a 5-minute chart, the top of the hour, right past, so we're almost at 2 and almost 3 hours past the market open, a 5-minute bar that starts to come under 25-minute open range with an entry on a early Heiken Ashi. Here we have a nice solid tail. Again, early entry would have been on the EMA crossover up here with some nice selling downside. 25-minute open range stall. And then here's my first bar, which would have been at 966.3. Coming all the way down. And again, my target's down here, 961.3, would have lined up with a daily S1, a 1 hour open range at S2, and a cam level L3. So front running all those targets could have been an opportunity to be assured some profit taking, and then keep a runner on, and your runner probably would have been taken out, but a nice 40 to 50 tick drive there downside. The last trading opportunity of the day was as price moved up through the range. Again, in the last several minutes of the trading day, something I chose to stay out of. Trading opportunity on the 5-minute chart, where price broke above the 5-minute open range here. And then on a Heikin-Ashi, we got some nice buying here above the 25-minute open range for a good 20 to 30 tick drive up here. One of the other charts that I tend to use a lot to make sure that I stay in the trade longer are 4 EMA. So lining up my 4 EMA here, 5 above the 13, 21, and 80. Above a 534 gives a nice entry above the range for a nice 30 ticks. Again, that was the second trade of the day, and I did not take that trade. One of the nicer setups that I tend to use when outside of the 25-minute open range would be an EMA crossover with a pullback. Price did grind up through the day, through the Fibonacci, through the open range, but using a Fibonacci extension from the low of the low to a crossover, retracing. Another trade management style as price hits each target. Price action stays above the 34 EMA, hitting each target, moving your stop to each previous target. And so target number 4 was hit on the Fibonacci extensions, which would have gotten you a lot earlier had you taken the EMA crossover here, or had followed on the pullback of the Fibonacci extension. You would have first placed your initial stop at 965.6 and move your stop up to break even once 969.3 was hit, and would have never been taken out, and you just rode it up. Again, this is not a trade that I chose to do today, being that price action was just going through the open range, and this is a method that I tend to use either above or below the range itself. So that concludes today's daily wrap. Feel free to stop by at tradingfibs.com for more charts and more descriptions of today's wrap-up or each daily wrap-up, or any of my social media outlets to obtain more information. My trading mantra of know one thing, know it well, rings true for all markets. Whether you trade the ES or Apple, my plan will keep you disciplined. You can find me every day on Twitter at TradingFibs, TradingFibz. And as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Hey everybody, have yourself a Blue Zone day. See you tomorrow.